So continuing with itemized deductions, medical and dental expenses, you can have, if your combined medical and dental expenses exceed 10% of your adjusted gross income, then you can deduct the amounts over. The Hopefully your medical and dental expenses don't exceed, but anyway, if that's the case, you might be able to deduct some of that. So taxes you paid, so the real estate property taxes, there's a limit of $10,000 for state and local taxes. So um, that combined with the very high level makes it very difficult to reach the threshold. Um, Personal property taxes, we don't pay those in Texas, but some places they do. They pay personal property tax on vehicles, and in some states, I know Alabama, Colorado, for example, the those taxes, they are can be much greater than the vehicle registration fees that you and I pay. Um, State and local foreign income taxes. You can also elect to pay to take state and local sales taxes instead of your state and local income taxes. You can't do both, but you can choose one or the other. Uh, the some interest you paid, the uh, mortgage interest, primarily mortgage points, uh, interest paid on loans used for investments. So gifts to charity, cash or actual goods given. If a cash contribution exceeds $250, you have to have a receipt for that. It's actually best to get a receipt for anything that you donate. Um, there's actually the tax software actually will help you value donations. For example, if if you donate clothing, um, the a there's you know, various softwares that will help you go apply values that are deemed as justifiable to the IRS. So, so uninsured casualty and theft losses that exceed 10% of your adjusted gross income. Yeah, it's one of those things that you hope you don't have. The miscellaneous deductions, they're in excess of 2% of adjusted gross income. There are others allowed at other miscellaneous deductions allowed at 100%. Gambling losses, business expenses for workers with disabilities. Um, as we mentioned, exemptions were eliminated for 2018. The um, the this is a table 4.2 is just more tax rate schedules. Again, these are old versions. I included the 2018 actual tax brackets that are very similar to what we would be facing now. The rates would be identical. These brackets would be adjusted. They'd be increased to reflect the impact of inflation. So we're going to use those, and after we go through those first four steps, then we're going to determine our taxable income, and we would use a tax rate schedule very much like this. There are other ways to calculate um, your taxes, and we'll talk about that in a minute. So your preliminary tax liability is based on your taxable income using that tax rate schedule or tax table. The taxable income, as we mentioned before, the amount remaining after we subtract all the adjustments and deductions. Again, exemptions went away. Um, The next slide is an example of a tax table. The IRS does produce tax tables. They produce these. I assume you could find them online, but they used to be able to. Probably still can pick those up in the post office. They so you're literally you literally flip to the page where it applies to you, and so your taxable income is in this case between $59,000 and $59,050. Your tax liability would be $10,613 if you're single, $7,496 if you're married. So it's as simple as that. Yeah. I assume those booklets they're still published each year, but they may not be. So tax credits. Tax credits. The they are tax credits reduce your tax liability on a dollar for dollar thing, dollar for dollar basis. So they are a wonderful thing. They don't. Most of us don't qualify for tax credits, but there are various tax credits that you can take. There are a couple related to education. Uh, so so tax credit, dollar for dollar decrease in your tax liability. Some credits are refundable, meaning that you receive the amount even if it reduces your income to amount less than zero. So that's why you always want to file a tax return. So if you are eligible for certain tax credits, that you could actually get a refund even though you don't have any uh, taxable income. So tax credits include health insurance premium tax credit, American Opportunity Tax Credit, Lifetime Learning Credit. Both of those are education based. I believe the American Opportunity Tax Credit applies to undergraduate education only, and then Lifetime Learning Credit can be applied. I think it's a one-time thing that can be applied. I believe either in undergrad or graduate school. Earned income tax credit um, is a benefit that lower income individuals receive. For the most part, I believe it's for lower income individuals with children. Child independent care credit, child tax credit. Um, there's an adoption credit, mortgage interest credit. Mortgage interest credit is also a low income benefit that provided to low income individuals with regard to mortgage interest. Uh, Retirement savings contribution credit, elderly or disabled tax credit. So the final tax liability. So after subtracting your credits from your preliminary tax liability, you arrive at your final tax liability. You add up all your prior payments, withholding, and or estimated tax payments, calculate your balance due or your refund. So we'll start with concept check 4.2.